Hello, everybody. This is 9 p.m. IST, which is Indian time. So good evening to you, to the folks in India, and good morning to you, to the folks in America, and good afternoon, perhaps, to the folks in Europe. It's a delight that you have joined us today. I would just like to make a few housekeeping announcements. In the beginning, I would like to state that there is a code for continuing legal education credit, which is 94306. 94306. Secondly, at the end of this session, which is going to be roughly around 10 p.m.-ish, the session will automatically transfer to a informal online coffee session. So please join that. It's going to be totally informal. I'd like to very briefly mention the names of the speakers today. We have Nishith Desai, who's the founder of Nishith Desai Associates, a renowned international lawyer, lecturer, researcher, and a thought leader. He's regarded as the father of international tax in India and is a true pioneer of international tax law. We have Ashish Agarwal, Vice President and Head of Public Policy at NASSCOM. Kush Srivastav is the co-founder of Card91 and a fintech veteran with 18 plus years of experience in the industry. Sudipta Jash is a startup advisor and fintech strategy expert. He has previously served as the head of international business at PayU Payments. Huzefa Tawawala is the moderator for today. He heads the Bangalore office along with the disruptive technologies practice at Nishith Desai Associates. Aaron Kamath is a lawyer and leader of the International Commercial Laws and Technology, Media, Telecommunications Laws Practice Group at Nishith Desai Associates. And Ashish Sudhani, who is a leader of the International Tax Practice Group of Nishith Desai Associates. At this stage, I'd like to invite Mr. Nishith Desai to speak a few welcoming words. Over to you, Mr. Desai.
Thank you very much, Arvind. Once again, good evening to people in India. Good morning, wherever you are. Good afternoon, wherever you are. Good late evening, wherever you are. And it's a real delight for me to welcome all of you to this webinar. And also, I must say thank you to all the panel members, the speakers who are joining this particular session. So I'm thankful to you. Thank you. And as you all know, that fintech revolution is moving at a torrid pace in the world, including in India. I think that it's a tsunami of a sort. And of course, the biggest benefit is that fintech is providing is to its customers, whether they are the common man or corporate business people or financial institutions. And the key value proposition of fintech is its incredible convenience that it provides to the users compared to pre-fintech area. Of course, I have no doubt that fintech will continue to disrupt traditional financial services given the innovativeness of the founder. In India, we have several disruptive unicorns in the fintech space, and more will emerge. And of course, our firm Nishith Desai Associates has been at the forefront of research in the technology area and especially fintech. And this webinar is dedicated to fintech, is one such effort. I hope you all will enjoy interaction, and we look forward to hearing all of you. You are all good experts in your own right with experience of the type, which everybody would like to learn about. And over to you.
Thank you.
Back. Thank you.
Thank you very much, Nishith Bhai. The resumes of all our esteemed speakers are available on the event website. At this point, I'd like to invite Huzefa Tawawala of Nishith Desai Associates to kindly moderate the rest of the session. Over to you, Huzefa.
Thank you. Thank you so much, Arvind, and thank you, Nishith Bhai, for the context setting for this evening. And once again, extremely warm good morning, good afternoon, and good evening to all our friends. I think the theme is extremely opportune and interesting, right? Fintech and what is the landscape when it comes to India. And what we are going to do today is that we are going to discuss the growth verticals, which is extremely critical from an industry perspective. Second, we are also going to tap upon the industry trends. Third, we also going to talk about policy and what is kind of meandering and shaping policy in India. And last but not the least, we're also going to give a little bit of insights, of course, from a legal, regulatory, and tax front. And before we kind of dive in to the session, I have a few tidbits from a fact perspective and why does this webinar become so relevant. In India, fintech has the highest adoption rate when compared to the world. It's close to 87%. Out of the global unicorns which have emerged in the fintech space, close to 14% are in India. The fintech growth story from a revenue perspective is poised to be 200 billion by 2030. And I think last but not the least, from a fact figure perspective, by September last year, the total digital transactions from a volume base was close to USD $2 trillion. So this is why the entire space is so interesting and exciting. And without further ado, let's kind of dive in. And we've got some great panelists and speakers. With this topic, I think the first question, which is a logical segue to the session, is that let me go to Kush here. Kush, bases your industry experience for close to 2 decades. What are the trends and challenges you're seeing from a white labeling and co-branding perspective, basis the industry today?
Yeah, thanks, Sudhaifa. And again, good evening, good afternoon, good morning to everybody. Let's not be repetitive here, but just to set the context right. So obviously, as Nishith sir said, as Arvind sir said, and as you have pointed out very, very dearly, fintech is something which has been there from long. Having said that, we are reaping the benefit now. I have been always a believer that it has started happening because of the acceptance that has started happening on fintech. When I say acceptance, it is the acceptance of people, it is the acceptance of government, it is the acceptance of a simple merchant. And UPI particularly has been a very, very trailblazer. So in India, I mean, you speak to people in US, they say wire transfer takes 2 days. We're like, dude, we don't even take a second. So that's how it has changed, that's how it has evolved. And similarly, now multiple such concepts which were only entirely in, let's say, West have been adopted to India as per Indian sensibilities. One such thing, as you rightly mentioned, a co-brand or a white labeled product, which particularly seizing an India philosophy is, yeah, we will make it ourselves. We will not want a co-brand partnership to evolve because I am a big company. I should ideally be able to make it myself. But over the last few years, and particularly from the COVID times, it has maybe from the demonetization time, maybe you can say that after that, what has evolved is that people have started to think that how can my GTM be faster? Because if my GTM is not faster, I'll be definitely losing out. In India, things change every day in, day out, whether it's regulations, whether it's new products which is coming in, whatnot. They are just changing in, day out. And white labeling, particularly from that perspective, becomes a very, very faster GTM for a particular business to adopt. So what we have seen is how do people start doing things, let's say some co-brand business who wants to launch a, let's say, co-brand digital instrument, maybe a co-brand mutual fund, maybe a co-brand credit card, maybe another year down the line. But they're not really supportive of whether this will be a PMF or not. So what happens is infra players, maybe a Razorpay, maybe a Zeta, maybe a Card91 kind of scenario, they give all these white label solutions. And this becomes a very, very simple PMF for these guys to make sure that the customer is actually wanting what they are delivering to the customer. And that's why we have seen quite a lot of people, at least people who have come up across for us in the last few months, they have all started saying, dude, give us a solution which can give us a GTM of a week's time rather than, 4 months to launch a prepaid or a credit card that we are doing anyways. And this works well in their favor. Okay, fine, I can basically launch it. And in the meantime, they start strategizing whether there's a co-brand opportunity that can happen. Co-brand particularly because the liabilities, as per as the very contextual work is divided, fintech can just focus on their DNA of distribution, and the infra player will do all the kind of stuff which is related. The bank will take care of any regulation. So that's why all these kind of tie-ups which were not existing before, like you see bigger companies. I used to be in a company called Mcheck. We tried to do everything ourselves at that time. This is in 2006 to 2012 kind of scenario. Now you see multiple people collaborating, having the same stuff, just trying to figure out that, okay, this is my DNA. I don't want to get into this. And I have another partner who can basically co-brand this and works out well. So in all, if you see, it is most importantly to have a faster GTM, get a product market fit. That's where the white label client stops. Generally, after that, you need to have a brand. You need to have your co-brand coming into picture. And that's when people realize that, okay, this is the time when I've done the PMF. I see there's a great potential in revenue. Let me start making a co-brand product out of it. I don't want to develop it myself. I will develop it. Even big companies, I can name multiple. They are saying, dude, I don't want to get into fintech. Fintech is being powered by some banks and a few fintech providers. Let's just tie up with them. Let's just try to give a co-branding offering wherein the customer is at benefit. So finally, with frankly all the regulations, all the guidelines, basic criteria is that the customer is happy. So that has been the gist of any solution that we have made, any solution that people otherwise are making, any solution that will come across. What the customer wants is what you give in to actually go ahead and deliver. So that's where I stop, Zefa. And if you have anything else, you can just let me know.
No, I think excellent inputs. I think the key out here, question, completely echo your sentiments in terms of the go-to-market strategy, which is GTM, right? Focus on your core, and if you want to outsource or you want to co-brand, let that other person who has a certain expertise in that, and together from a collaborative effort, it's always a customer win-win, because in that sense both of them are leveraging their go-to-market strategy. So I think excellent inputs again from you, Kush. I think on this note, right, let me kind of veer to Sudipta, because Sudipta has also been in the industry for close to 2 decades now, and he's actually also been seeing how the regulators have evolved. So Sudipta, basis your nexus to the industry, how do you see the stance of the regulators when it comes to payment intermediaries, service providers, and in general, what is the status from a regulatory perspective on those?
No, thanks, Josefa. Great connecting with all of you. So, one of the things that I want to really start with, right, because I think the way you asked, and when people think about regulation, it's about clamping down. It's a negative way to kind of think from a regulator perspective, right? But if you look at it, right, I think we have been very fortunate that our regulators, right, be it RBI, be it ED, be it CCI, right? I think it's always been a consumer first approach, right? So while it might seem in the short term that it is, stifling growth, it's clamping down on the different players, especially the new players. But if you really look at it from on a long-term perspective, right, I think regulation really helps in the orderly growth. And I can give you a few examples here, right? I mean, if you look at in the last 3-4 months, right, in the whole digital virtual asset space, which was pretty much unregulated, right? If you see what is happening, right, without a regulation in place, the way consumers are, I would say, getting impacted, right? It's unfortunate, right? So I think that way, if you look at it short term, it might seem painful, stifling, whatever you want to call it. But on the long term, it definitely leads to a orderly growth of industry, right? Now, let's kind of look at a little bit about the history, right? When you talk about how the fintech or the payments ecosystem, right, really got impacted by, I would say, regulations as we call it, right? I think we should kind of move back to 2016, post demon. I think if you remember at that time, the whole prepaid, the wallet kind of wave started, right? And I think if you look at it, people were just opening wallets left, right, center without a KYC. So if you see the real history of the regulation from a fintech payment perspective, it was actually in October 2017, right, when RBI asked wallet players, hey, meet all the KYC norms by, I think the date was end of Feb, like 20th Feb 2018. Uh, what really happened was 90% of the wallets really couldn't, be compliant. So if you look at it, wallets really kind of led a natural death, right? And if you look at UPI also started picking up, right? And we heard the earlier speaker also talking about how UPI has really picked up, right? So I think that's where the whole regulation started in. And if you then look at the key guideline or regulation that came in after the PPI thing was the PAPG, right? Which is essentially just for the benefit of everybody, right? PAPG is an abbreviation for payment aggregator and payment gateway. So essentially, I think around 17th of March 2020, RBI issued that guideline that payment aggregation business, which essentially, you can imagine payment aggregation business is like what Stripe or Adyen does globally, right? It works with merchants to provide all the payment options when you are buying something online. So if you see, this industry was actually unregulated for, I think, more than 10-15 years, right? I mean, it was 2020 when BillDesk started it. 2012-13 is when a lot of companies started getting into this payment aggregate business, right? And I think post demon is when I think the whole payment aggregation business really, I would say, took off, right? So again, 2020 was when the regulation around the payment aggregation business came into picture. And then if you look at post that 2021, the recurring guidelines also had kind of far-reaching consequences because there was a limit of 5,000 rupees, which insurance companies, some of these recurring kind of businesses were a little uncomfortable. Thankfully, the regulator increased it to 15,000, which I think shows that the regulator took into account the feedback, right? That 5,000 probably was a little low given insurance premiums, especially if it's monthly, it's slightly higher, right? So I think from a regulation perspective, to 2021 was again a far-reaching because both recurring as well as the card on file tokenization, right? So just to give a quick 30-second, what it was it didn't allow anybody except issuers or networks to store cards. So that also kind of led to a little bit of flurry in the industry because it for businesses which are into recurring or which are into e-commerce, card storage is an important, I think, feature, right? Because if you can't, then there'll be very, very high friction, right? So I think 2021 was that the guideline around recurring and card storage. And if you look at this year, which is 2022, I think the primary guidelines or the regulations are coming under lending. I think there was a guideline which came from the working group, right? So, which is again something that people are figuring it out, right? How to implement, what's the implication, right? Again, if you see what happened from the lending perspective, right? All, Chinese apps and stuff that happened from Hyderabad, right? I think that kind of led to the lending guidelines coming into picture in the last few months, if I can look at it, right? Uh, does that answer? I think you had
No,
another question.
absolutely. No, I think, Sudipta, you have summarized the whole thing so beautifully in terms of the five key laws which have kind of unfolded in the last couple of years, right? It moved in right from 2009, where payment service providers were called intermediaries, not intermediaries under the Information Technology Act, but financial intermediaries, where they have come down to a more regulated regime in 2020 and all the corresponding changes which have happened. I think one key takeaway, for our audience is that basis what Sudipta is saying, in the recent past, the government's approach seems to be to protect consumer interest. I think all of this kind of ties down to something which is paramount, which is consumer protection interest. Well, of course, it can be argued that whether some things are overly regulated or which is not. But one thing for sure is that the serious players will continue in the longer run when it comes to an environment being more and more regulated, which ultimately, kind of may benefit consumer interests. But on that note, I think it is very important to get in, Ashish's insights, and considering, his policy role, and, he working with so many industry players. Ashish, I think it is very appropriate if you could comment that, you have been interacting with the fintech industry, for quite some time now. What do you believe is, the reaction of the industry players to the regulatory developments which have unfolded?
Thanks, Josefa, and happy to be here. I think just to pick up from what Sudipta was saying is absolutely right. Overall, there is a great focus from RBI in terms of looking at it pretty much in a 360-degree kind of a perspective. So on one side, you have the stuff like regulatory sandbox, which is actually now working, where we have seen, I think we are in the third cohort and so on and so forth. And then you have regulations which are now coming in saying that, the markets are expanding in a certain manner. And if you look at it, it's not that RBI has rushed into a particular regulation at a very early stage. In fact, if you go back and look at the developments in the industry, you'd find that RBI has pretty much given time, whether it is the wallets, or whether it is the lending part, or just the digital payment ecosystem overall to grow. And then RBI has stepped in, right? So in that sense, it's not, one would say that it's not that RBI has come in very early in any of the markets to kind of, over-regulate. But that's when I think, from an industry point of view, when RBI does come in, one overall experience is that for fintech, the interaction with a financial regulator like RBI is still evolving. And to that extent, I think the industry itself needs to take up its engagement level with RBI significantly. And I'm not saying that what is happening today is less or more. It's just a sign of where the industry is in terms of its own maturity. And I think it needs to therefore take it up a few notches when it starts engaging with the RBI. And the same is true for RBI. So RBI, for example, if you take the recurring payment or the card-on-file tokenization, this is probably the first time RBI was engaging in a sort of regulation which was impacting merchants at a scale at which it did. And given the fact, the extent of digitization, the impact was just tremendous. So from an RBI point of view, also it has been a learning experience. Now, what we don't want is that we don't want this learning experience to be very expensive for everybody. Now, the experience with some of the recent, when I say recent, I'm talking about last 2-3 years, in terms of whether it's recurring payments or whether it's card-on-file tokenization, is that the entire experience has been a bit expensive for everybody. So now the hope is that after the experience of first the recurring mandates, and of course we are seeing positively that when it came around to the card-on-file tokenization, it has been handled better. So there is definitely some maturing in terms of how we think about it, and how RBI is looking at it. And the fact that RBI set up a fintech department, that again is very early stages. So we'll have to see how that also matures as we move forward. So in that sense, I think it's going to be work in progress. It's not going to settle down soon. I think it's going to continue in this kind of a manner where we are going to see a bit of unpredictability, where industry's expectation from RBI, I think, is getting increasingly at a level where industry is now realizing that RBI is very serious about some of the measures which it is proposing. And therefore, that if you see a few years back, a sense of denial that, okay, this will go away, I think that is not going to happen. So that's a complete understanding, I think, which industry is coming to terms with. And second is RBI itself needs to realize, and it's perhaps realizing in some measures, that given the entire dynamic nature of fintech, perhaps RBI does not have all the right information at a stage when it first comes to a decision to say that something needs to be done in so much time, and the fact that it will come through smoothly. I think RBI has realized that there are many more nuances, and it needs to engage much more proactively with the industry. And then the final point before I stop is this. So for example, we are also seeing this bit of payment aggregator license bit, which is just playing out. And again, hardly a handful of license, as I think just about 5 that I am aware of, or maybe there are a few more, but have come through, right? And as against, let's say, original number of applicants, which could have been close to 200. So I think this is again a kind of a process where, both from an industry point of view, to understand that RBI's process of licensing might appear opaque in terms of how it is actually decided on the license, but in terms of its own criteria, it's going to be very strict. So I think the fact that can you expect relaxation in those criteria, I don't think that's the way forward. So I think it's a bit of a work in progress, maturing progress, but just to pick on with those points, if you succeed in India, if you succeed with RBI, pretty much you're solid, and pretty much you're good for the world. So that's one takeaway for sure. Thank you.
Again, excellent inputs, Ashish. And I think one of the key things which has also evolved is, and people who've been associated with this space for a decade and a half, is just the depth in which, we've seen some of these guidelines getting released. Especially whether it is outsourcing draft guidelines which were published, a couple of weeks back. The new lending guidelines which came out a week ago. I think more and more focus is also going on RBI setting internal working groups. Like, I think Ashish rightfully mentioned that there was a working group on digital lending, which has also been set up. So there has been some sort of a consultation or a consultative approach from an RBI perspective. And yes, the industry would need to engage more and more. And that consultation, the mutual consultation, can only increase. But I think one point which is extremely relevant, Ashish, which you highlighted, is that now the industry is actually aware and has accepted compliance. I think there's no shying away from that. It can get deferred, as tokenization kind of got deferred for a few months, but eventually it is there to be implemented, and so would the other things as we move forward. But on that note, right, the flavor right now over the past couple of weeks has been digital lending. There has been a lot of focus on digital lending, and some of the reasons which Sudipta and Kush mentioned. So let me get in Aaron, from Nishith Desai here. Aaron, what it would be wonderful if you could provide some insights basis the recent regulatory proposal and changes which impact the digital lending space.
Sure. Thank you, Josefa. And, at the outset, please forgive my voice down with a bit of a cold with the changes in weather. But digital lending, taking, one phrase from, Ashish Agarwal that really, stayed with me, is the RBI is serious about some of the laws that it's enacting, right? And there are a couple of developments that have happened on the whole digital lending side even this month, in August, right, as we speak. But this is something the RBI has actually been looking at over the last 2 or 3 years, at the minimum, right? We spoke about some of the Chinese apps. So there was a specialist working group that was set up by the RBI that actually back in January of last year, 2021. So for more, actually it was set up before that, and they had actually published some consultation and a draft framework. So it's been around for more than a year and a half, and they found more than 600 of 1,100 apps available on the App Store to be illegal. That's almost half of the apps. 600 of them were found to be illegal. The general concerns, by the regulator, by the industry, and as a firm, what we've been observing, because of some of the the client matters and the matters that come to us, is that there were a lot of malpractices in the industry on the digital lending side. While on one side the industry was advancing, with microfinance, with a lot of internet adoption, there were also corresponding, some practices, mis-selling, breach of confidentiality, breach of privacy, exorbitant interest rates, for instance. Some of the recovery practices were alleged to be unethical, somewhat intimidating at times, somewhat leading to harassment as well. So these are the kind of, concerns that, the industry had, the RBI took into account, and this has ultimately culminated into, some directives that have finally come out to regulate the space. Now, what is unique, about this is that, for instance, a couple of months ago, RBI clamped down on PPIs and said that, PPIs can't be loaded through credit lines, right? And a lot of the fintechs, and when I say fintechs, I mean players in the fintech space, but not your banks, not your NBFCs, right? But some of the fintechs that we spoke about that have partnerships that ride with them. They had to restructure some of their lending operations, right, because of that particular restriction. Now, in what is quite unique is that the RBI has contemplated bringing lending service providers, into the foray, and essentially, come up with certain regulatory framework, to govern digital lending apps, right? For instance, loan dispersals, repayments should only be executed between the bank account of the actual borrower, the individual, and the regulated entity, which is basically the NBFC or the bank who's dispersing the loan, and should not pass through or go into a pool account, of the third party, right? Any fees, any charges, to the third party, to the lending service provider, to the fintech needs to be directly borne by the bank, for instance, and cannot be charged down to the user as additional charges. Some compliances, for example, a key fact sheet with all, the transparent terms, the APR, the annual percentage rate, the total cost of the loan, any increase in credit limits, that has to be very transparent, shown to the user before the loan contract is signed. Both the bank as well as the fintech, the lending service provider, have to appoint grievance officers. If a complaint is, for example, not resolved within 30 days, that has now been brought under the banking ombudsman scheme, and a complaint can directly be made to the RBI ombudsman mechanism in place. From a data side, we've read a lot. We've come across cases where, some of the lending apps ask for excess permissions, on mobile phones, to sometimes pull, contacts, excessive data from users. So now there are certain compliances where only data which is actually required on a need basis to assess the loan, to disperse the loan, only that data should be collected with explicit consent, from the user, from the borrower, which can later be revoked, for instance. And needs to be deleted if the user, goes to the platform asking for deletion. And I think in terms of the regulation, right, these kind of loans, digital loans, need to be reported now to the credit information company, what you call is the CICs, right? So that is a step in equating, your other typical, your traditional loan system now also to the digital lending app ecosystem, by requiring that such loans are, reported to the CIC. Any new digital lending products, introduced by banks, NBFCs on, these kind of digital lending platforms, or dispersed by these kind of platforms, also need to be reported, to the CICs. So we can see, a paradigm shift where, these kind of products, these kind of loans are now being brought into the garb of, some of the traditional requirements for loans, in terms of, transparency, consumer protection, data as well. And I think I'll close on, one particular point, and this was actually released just 5 days ago by the RBI, and it's at least, going through various directives. This was the first of, first of the sort that I saw, from the RBI, where the RBI went to the extent of calling out, the banks and NBFCs, and asked them that in terms of the agents that they engage, the service providers, that they need to be strict, that, practices relating to intimidation, harassment, any humiliation, breach of privacy, even involving the individual, the borrower's family members, from their contacts, their friends, their colleagues, sending inappropriate messages, sometimes reaching out to them on social media, threats, anonymous calls, need to be refrained from, in the overall recovery process of the loan. And they even set up a time that, for example, these kind of, loan recovery activities or calls or correspondences cannot even be made before 8 a.m. or, after 7 in the evening. So it's quite unique that the RBI is getting serious and, in a way facilitating, the ecosystem, bringing lending service providers, into the realm, acknowledging their presence and, the importance of the ecosystem, but really trying to eradicate some of the, unfortunate practices that have also, evolved in the industry and have come up. So, that's just a flavor of what's been happening, in digital lending last 2 years, especially the last 2 months. But it's here to stay and it's here to thrive even more. Back to you, Josefa.
Again, excellent input, Sharon. You kind of summarized it really well, including the new implementation guidelines, which came on August 10th. And in fact, very interestingly, the law which Aaron referred to, it is already in force. And basis that same guidelines, the RBI has also hinted towards future recommendations which would get implemented as law. And that's another point which the industry can actually look at, which it's not yet law today, but they've actually hinted, where they believe that in principle this can be implemented. And there's a lot of focus and compliance on the digital lending apps, especially from a security standpoint of view. And there's also some guidance on NBFCs who are undertaking digital lending if they haven't been active for some time, and how things will pan out. So short point being that the RBI is looking at this space very closely, and unscrupulous activities, the intent is it kind of gets limited. But I think on that note, right, there's one thing which you can never ignore. You can never ignore tax. We have law on one side, but you always have tax on the other side, which is also equally interesting. And one of the pressing questions which is there on commerce today, on digital commerce today, right, is there any sort of headway on the TDS issue, the tax deducted at source, from an indirect tax perspective? And Ashish, who's a tax expert, Ashish, would be great if you could provide insights basis the obligations of payment service providers, and how does the whole TDS thing pan out for digital commerce?
Thanks, Josefa. So I think in 2020, the CBDT came out with the law with respect to TDS on e-commerce operators, where, if an e-commerce participant is providing services through the e-commerce platform, then the e-commerce platform has been made subject to a withholding tax obligation. How does this withholding tax work? It basically means that when a payment is made by the user of the user of the service, or buyer of that good through the platform, which basically has the e-commerce participant selling that good or service on that platform, then in that situation, the e-commerce operator becomes subject to a withholding tax. Now, unfortunately, the way the provisions were drafted, it gave an deemed withholding tax obligation to the e-commerce operator, wherein the e-commerce operator, even though was not receiving the money from the user, was still subject to a withholding tax obligation. The rate of withholding tax is 1%, and in certain cases it can be 5% if you don't have a PAN, etc. Now, from an e-commerce participant perspective, how much this matters is one question, but from an e-commerce operator perspective, this is of significant importance, because let's take the example where I went and bought something from one of the e-commerce platforms, and the payment actually was not made to the e-commerce platform, but was made to either a payment service provider, or it was directly made to the seller. Now, in this situation, the way the provisions work, and then in a situation where the money is directly gone to the seller's account, because the seller was on the website of the e-commerce operator, there is a withholding tax liability on the e-commerce operator, even though it did not receive any money. Now, this casts an obligation which is almost impossible to perform, right? Because it did not receive any money, but still is subjected to a withholding tax obligation. The second question that arrives in this kind of a model is what happens to the commission that the e-commerce operator is supposed to get? In a transaction of $100, if it was supposed to get a $5 commission, and if the withholding tax obligation also is likely to be that much, then how does this work from an e-commerce operator perspective becomes quite important and necessary to understand. Usually, the e-commerce operator would want to deduct that commission amount and then pay the balance to the seller. But in this situation, it has to first pay the TDS to the tax department and then ask the e-commerce participant, which is the seller, to perhaps reimburse it or pay the commission separately. So it gets quite interesting to think how this is going to work out in the practical situation. Now, coming to a situation where the payment is actually made to the payment service provider, who is actually holding that money and then is going to make the payment to the seller on the relevant date. Now, in this situation, because of the way the RBI guidelines are worded, there are only certain permissible debits and credits that are allowed from such payment service providers' accounts. And payment of withholding tax is not one of them. So this again leads us back to the same situation that, the money is kept in that escrow account with the payment service provider, and who's going to now, how is the withholding tax now going to be paid? Again, the commerce operator, because the goods and services were provided through the platform, becomes liable to withhold tax, and it has to pay tax on from its own pocket. Of course, there are arguments to make that, this is an impossibility, and therefore, how can you perform this obligation when there's no money, etc. But I mean, at the end of the day, they are just arguments, and we'll have to consider how practically we need to look at this. Now, subsequent to the provision that came about in 2020, there was also a circular that was taken out by the CBDT. Now, this particularly aimed at giving clarifications to a number of issues. One of them was with respect to the payment service provider. Now, if you look at the definition of e-commerce operator, then technically even a payment service provider could become subjected to the withholding tax obligation. But I think CBDT understood the problem with such a definition and said that the primary obligation in such situations would be with the e-commerce operator and not with the payment service provider. But does that make the payment service provider exempt from withholding tax? The answer to that question is no. It's just that the primary obligation is with the e-commerce operator, and they have to pay it first. If they haven't paid the TTS, then the then the payment service provider becomes liable to pay that tax amount. Then the question there would be, how would it pay the tax? It cannot use that escrow money that is kept with it, right? So would it go out of pocket again? These are all questions that remain to be answered, and how this is going to pan out in the near future. What's going to be the issue before a court or a tribunal? How are they going to answer it? I think this is where we are on tax, Udafa. I think that answers your question, hopefully.
No, absolutely it does. And from a implementation perspective, right, there is still one issue which will continue. If the payment is routed through a payment service provider, which in all cases, it would be in most of the cases. In the past regime, the money was routed through a nodal account, which was the account of the bank. But now with, the new payment aggregator guidelines coming in, which were introduced in 2020, and the licenses will soon start unfolding, the concept has moved to an escrow account. But at a construct level, there are limited debits and credits which can be made. And one of the permissible debits which can be made is payment to any other account basis directions of the merchant or the seller. So if all of this needs to seamlessly operate, right, the contractual arrangements between the e-commerce operator, which is the marketplace, the payment service provider, and the users independently, all of this would need to kind of be looked at holistically. And of course, the agreement of the payment aggregator with the bank also will become very important if this needs to work seamlessly. But yes, this continues to be an issue, and practical implementation will get more and more interesting. But a point extremely well taken, Ashish Sodani. And let me, on this note, right, move gears and come to the other Ashish, which is Ashish Agarwal. we've kind of spoken about law, we've spoken about regulations, we've also spoken about consumer interests, user interests. But Ashish, basis your on-ground interaction with the government as well as the industry, right? How do you tweak the lawmaking balance where you foster the industry, but simultaneously, you also take into account, user needs, user protections? How do you see that unfolding from a regulatory perspective?
So purely in the fintech context, if you look at what RBI is doing, I think RBI itself is shifting its focus, and I think it is quite evident to not only try to fix something which is broken, but also to make sure that there is adequate preparedness in the industry. So given the amount of digitization and level of digitization, I think it has now moved on, one, to focus proactively on cybersecurity capability building of its regulated entities. I think that has been a huge focus. We discussed digital lending. I think now it has set up a committee which is going to review the consumer standards in some of these areas. So one part of RBI, I think, which is good, is to say that now increasing focus on preventive measures, including, I think, the amount of work that has gone in on fraud prevention of various kinds. I think some of that is very much visible in terms of responsiveness, which we are seeing now with the industry and across regulated entities, and also some of the other entities who are now getting increasingly part of the RBI regulation. I think one area which is kind of a work in progress and a gap is the erratic process which RBI employs. So in some places, so for example, today it has come out with a discussion paper on regulation on payment charges in the industry, right? It has come out with a discussion paper, and this is an area which we have seen has been in discussion for 5-6 years, and with a lot of developments happening over a period of time. And you talked about in some areas you set up a committee, but there are a lot of other areas where you either get a final circular or a draft circular, and which translates into a final circular, and you, as an industry, you are pretty much at times wondering where has the input gone and what has happened to that input. I'll just give you a very small example. So of the other side. So for example, there is something called an online export-import facilitator guideline. The draft got published recently. It is something which will facilitate payments for small exporters and importers. And the word service is missing. So it is only talking about goods and digital products. And so as industry, you don't know why service is missing because there is no explanation. And then you're hoping it is some kind of an error, and then you're working. But these kind of things can be very disruptive for the industry. So I think given the way the, let's say the PSS Act is, or any of the RBI's Act are, they don't necessarily lay down a kind of a regulatory process for RBI to follow. So given that it is the quickest way to this will be that for RBI itself to put out a solid process saying that whenever we are doing any kind of regulation, kind of a development, this is the process that we will follow. So I think that is a big piece which is missing in the RBI setup, and then you put that process in, and then you combine that with some kind of a little more transparent consultative process. So for example, another example of this is that sometimes RBI issues clarification to particular entities, and those clarifications are not put up on RBI's website. And those clarifications are valuable clarifications, right? They apply market wide. So and which creates a gap in the industry. Similarly, in sometime RBI, for example, in the area of, let's say, carbon file tokenization, just taking the frontline role in publishing little more clearly the status of readiness of its regulated entities. So some of that, maybe RBI doesn't see that as its role. Maybe that's a gap which we need to come to terms with. But from an overall industry point of view, I think RBI has role in carrying the process a little in a manner which will make sure that the industry is much more involved, with a view that overall the cost of coming to a set of regulatory measures which will settle down, that entire process becomes much more inexpensive in terms of the pain that it generates in the process, and also probably much more fruitful in a shorter period of time. So I think that is the big gap, and to some extent you can rely on a regulator to do it on its own accord only to an extent. So not many regulators sign up to create accountability on themselves. So this is always a kind of a chicken and egg situation, that whether how much of a central government role or a parliament role do you see going forward when you think of regulation of fintech, and how much of a role can RBI itself address to make sure that it is geared for future from a point of view of the kind of industry which it is going to be involved in. So for example, RBI governor's speech are sometimes very, they can give you a good messaging in terms of where RBI's thought process is in terms of regulation. So if you look at the latest speech, it is clearly laying out the fact that it sees certain challenges in the context of big tech, and those are some challenges it is watching out for. It has articulated that the approach of entity-based and activity-based regulation, a combination of that will continue. Operational resilience is going to be a big thing. And we are seeing some of that in the outsourcing guideline, but we will see it in many different factors as more and more regulated entities will rely on clouds or big tech to run some of their services. Competition is going to be a big issue even going forward, just in terms of concentration of particular subsegments of markets and so on and so forth. So I think there are clear indications from RBI, but it is something that we have to always read in, and I think there is some bit of structuring which RBI can put to its process, which will really help stop that. Yeah.
No, I think extremely valid. And I think, the bottom line, Ashish, couldn't agree more with you that rule making can definitely become more solid. And the only way it can get more solid is, fruitful consultative approach. It's not that it has not been done, but it kind of still remains a little bit ad hoc. And I think going forward, one more interesting point which will develop, I know there's a separate department, within RBI, which is going to look at fintech, but with, the entire wave over the last 2 years is where more and more entities are getting regulated, or more and more businesses are getting regulated. Eventually going forward, enforcement of all of these rules and regulations and framework will also become really interesting. That, does RBI actually have the capacity and wherewithal to actually go and enforce it, across digital regulated entities? Because now they've kind of moved beyond, your traditional banks. It's very digital, but I guess we just have to, wait and watch. But again, points extremely well taken. And I think on this note, right, let's look at Sudipta, if you could kind of come in here. Where do you see are the growth opportunities? We've spoken so much about different verticals, what is happening now, policy shaping, landscape, regulatory. But where does the future growth lie? Which verticals do you see is, which would propel?
So, see, I'll obviously talk about the typical areas where people speak about, right, in terms of fintech growth. So if you look at, and actually, the best way to figure out, right, personally, as to where the money is or where the growth is, right? So if you go to any fintech conference, the number of people who show up, right? So if you see in the last few years, even this year, right, it was all about, payments, digital payments, B2B to C payments, right? But if I look at it, right, how the future will shape in 2030, right? And if you look at a report came up, I think earlier today, right, which talks about 1 trillion AUM, 200 billion revenues for fintech. Just leave that aside, right? I kind of feel that obviously, the four areas where everybody talks about, right? The digital lending, wealth management, insurance, neo-banking, right? And I'll come to all those four. But I think the two main areas where people are probably not talking as much, where I think there is a lot of opportunity is on the SaaS, right? When I say SaaS, the B2B fintech SaaS, right? And I'll just talk a little bit about it there, right? So if you see the normal SaaS business that is, I would say growing globally, right? So there's a lot of companies, Indian companies, right, which are doing phenomenally, right? And these are just in the SaaS business. So I'll just give you a few examples, right? So if you look at Freshworks, ChargeBees, these companies, right, which are typically Indian companies, they're doing great work, for global SMBs, right? And I'll come to your fintech part while, because if you look at the business comes and then the fintech kind of helps, right? The payments powers the businesses, right? So coming back, right? On the SaaS businesses, right? So if you see global SMBs are getting powered by Indian SaaS companies like ChargeBees, Freshworks, right? Even if you look at SaaS companies which are helping global developers, right? If you like Postman, it's an Indian SaaS, company, right? And then you have these large Indian companies which are being catered by the SaaS. So I think the next wave of fintech growth, right? Uh, Leave out payments, leave out lending, leave out wealth management, leave out insurance would actually be on the B2B fronts. And I'll tell you what it is, right? So if you look at accounts payable automation, accounts receivable automation, working capital optimization, right? So I think these are areas which people don't really talk about now, but there is a massive scope, right? If you see consumer payment, people have been doing it for 10, 12 years, right? But the whole area where you can help a business, right, to sort out the accounts payable, accounts receivable, working capital part, right? I think there's immense scope there, right? The second part, which I think has taken a little bit of a beating in the last few months, is the whole Web3 space, right? So again, I think there'll be lot more rationalization right now, and based on what I spoke to a lot of these investors, last week, what I figured out, right, the whole concept of Web3, right, which is, you eliminate the middleman, right? I think there'll be a lot of opportunities there for fintech companies to help companies in this space, right? I think there's a little bit of a long way to go there, but how fintech companies can help eliminate the middleman, and if you look at the whole concept of Web3, right, which is where you get rid of the large middleman, I think there will be huge scope, right? And the third area which I feel, which fintechs can leverage, right, is if you look at post UPI, people talk about ONDC, account aggregator, how this will play, in terms of adoption of fintech would be very interesting to see, right? So just to kind of summarize, from a growth or opportunities in the fintech space, obviously digital lending, wealth management, insurance, neobanking, everybody will talk about it, right? But if I leave that aside, I think on the B2B fintech SaaS, on the new asset classes or the digital virtual assets, number two, and third is the new digital platforms which the government is creating, right? ONDC, account aggregator, and how that will play. I think those three things would be something which would be interesting to note.
Very interesting. Very interesting. And I think the entire focus from a B2C perspective, where consumerism continues and models around the entire digital play continue, I think you're absolutely correct. When it comes to the B2B segment, the opportunity obviously, continues there. And, the very genesis of the industry, which is also on outsourcing to a large extent. I think on this note, right, let me also kind of go back to Kush, because it also goes back to the future in terms of growth. And Kush, basis your line of work and your company, how do you see the growth for the digital card industry, and where do you see that heading?
Okay. Thanks, Zephyr. So interesting question. Look, in India is typically a very, very different geography from any other developed geography in payments, particularly. So if you ask the question in US, it is a very different answer. because they foresee still that there is a card as a form factor. When I say card, it is a plastic card or a metal-based card, whatever is growing. However, in India, there are multiple digitized, instruments which are already being, or at least in the hands of, at least, if not all the billion, at least in the hands of some 500 odd million people. So the point is with a particular digital stream of payments already existing, let's say UPI to be very, very honest, which is exactly in the hands of mobile phone. In India particularly, the form factor is something which will cease to exist. So if you see the form factor, which is plastic as of now, that has changed over time. It has changed from a very simple plastic with match stripe to a plastic with a chip to a plastic with biometric comes these days to metal. But what, from our perspective and the way that India is moving ahead, what we feel is that everything will go to mobile. It's as simple as that. That mobile will actually be your wallet, it will be your tokenized card, it will be your UPI wallet, it will be your credit instrument, it will be your face recognition instrument, whatnot. It will all come to a very mobile centric thing. And particularly in India, two things that have worked well over the last 5-6 years is Geo and Demon and UPI. So that has what kicked the whole lot of Indian fintech after, let's say, 2016, when Geo made it as simple as zero charges for a mobile phone to be in the hand of people, and that's where the payment started. So what we feel is form factor particularly is something that will cease, whether it's a mobile, a CBDC coming in, sort of maybe crypto to a not to a crypto extent which is right now existing, but as Vista mentioned, some Web3 kind of technology which will get into payments particularly. So that will start happening. Everything will be in the hands of people at a click of a button, and everything will basically then fly from the identity that is being managed by the phone. It's as simple as that. And that's where we are seeing, if you see from a penetration point of view, still we are at 75 million odd credit cards. And there are 1 billion people in India, more than that. Let's say, even if to a very, very pessimistic estimate, by another next 5 years, we are thinking of at least doubling that number. So with that doubling that number, obviously the industry sees lots and lots of growth. And with that lots and lots of growth, few people in India have not seen a card. So the reception of the card will not cease to exist in the next 3 to 4 years. That's what we believe in. But moving down the line, let's say 2030, 2035, it will all be a very, very simple mobile phone or some kind of digital currency, which is in your hand, use it. Biometric can come in. Ideally, if technology evolves well, your thumb is good enough for a payment. It's anyways linked to Aadhaar, it's anyways linked to a credit instrument, it's anyways linked to everything. The only problem with biometric that comes across, what if your thumb gets, some accident happens and the thumb gets destroyed, then you lose that opportunity of saying that I am this person, because the only piece which is biometric has gone wrong. So there are a few challenges here and there, but having said that, we particularly believe that cash will cease to exist in India in 2030. That I'm definitely very, very sure of. It is irrespective, and it is very entirely in need of the country to make sure that cash cease to exist because of the cost of handling the cash later. And that has been a major focus from our honorable PM as well, from everybody who's in the fintech industry, to make sure that people have an instrument to take a payment, to get the money, and they have an instrument to make sure that the payment is accepted. And that's where I leave it. I think we are in a tremendous stage of growth. We are at the right time. We should ideally be, in another 6 to 7 years, be capturing the world. People see to India as the forefront of payment in fintech, in payment. And as you rightly mentioned in your first statement, 22 out of the 100 odd unicorns are in fintech in India, and they are growing rapidly.
No,
So
absolutely.
Yeah.
And we will continue to grow rapidly. I'm taking your words again, Kush, where you said grow rapidly. I'm saying we will continue. I couldn't agree with you more. We'll continue to grow rapidly. And yes, that's a great point what Kush makes, right? Form-based cards are going to get obsolete. And ultimately, everything is kind of going to move towards a more digital form, whether it's mobile linked or not mobile linked. And the question of security, data privacy, these issues will get ironed out. I'm sure as time goes by, there will be principles on security, design by security, data by security, and lot more. I think on that note, we have a question in the chat box. I'm sure our participants, if you all want to have more questions, please put it in the chat box or write to us. But I think it's a very loaded question. I think any of the panelists can take a crack at it, and I'll just read it out for the benefit of the other participants too. The question asked by Partha is that, do the panelists believe that the existing legislative framework provides RBI sufficient flexibility to apply licensing or authorization requirements to emerging fintech business models in a proportioned manner? And does the RBI have the technical acumen to understand such new age technologies rather than playing demigod always? It's quite a heavy question. I leave it to any of the panelists to take a crack.
Yeah, so I think RBI definitely has the regulatory flexibility to regulate the current and emerging fintech models. I mean, pretty much indirectly, it can also regulate a lot of merchants who probably will think of themselves at the farthest end of, RBI's sphere in that sense. Now, on the second part, I don't think anybody has some kind of, a given technical acumen to understand emerging business models. I think everybody, including the regulator, grapples with these things and comes to terms with it, and which goes back to the earlier conversation that how much you can involve a more coordinated approach, whether it is with other regulators or it is a consultative approach with the industry to actually get to that learning curve in a manner which is most useful and efficient. And that is what I think is a bit of work in progress, and that would be my response.
Sure. And I think,
Probably,
yeah, go ahead, Kosh. Please go ahead.
Just to point out Partha's question, it's obviously a heavy question, as you said. But what we believe is finally the regulators are, let's say, obviously they have seen the world now, and they are now talking, as Ashish also mentioned, that they have a fintech community. They are now talking to multiple people. It's basically primarily coming on a customer's privacy interest, which is what RBI is looking into. And on the second question, this is actually a fundamentally good startup idea to just have ability to be sold to RBI to understand these new age technologies and all. Because we were anyways talking today, like all the sort of data which RBI gets from multiple banks, there is no such API based approach. So that's again a startup idea which we have anyways presented to RBI as well, saying that we can actually go ahead and start building it for you. So these are few things, as Sudipta mentioned, these are all B2B SaaS plays. And this will all require a lot more tied up, lot more new industries coming in.
Yeah, absolutely. And I think, to be honest, team, that technology itself does not keep pace with technology, to be honest with you, because it disrupts and gets disrupted. So it's very difficult for laws to actually keep up with technology, which is constantly evolving. So there will always be catch-up Tom, which will be played. And but I think the key from an overall implementation and overall fintech ecosystem is the gap cannot be too much. I think that is important. That if there is technology, and the law can't be like 1,000 kilometers away, there has to be some rationality. And yes, we understand that it's difficult to always be on top, but I think RBI has made reasonable progress, especially in the last 3 to 4 years, in kind of keeping abreast. I think on that note, we've kind of surpassed the time. We will be breaking out into a coffee room. The NDA team will stay on. Leave it to the other panelists, if they have any other commitments. But back to you, Arvind, for closing the session.
Thank you so much, Huzefa, for a fantastic session. and great insights by our esteemed guests today, Ashish Agarwal, Kush Srivastav, Sudipta Josh. And I just want to make a note of the dramatic comment. I think Kush made it, which was cash will cease to exist by 2030. That's something dramatic. So, and also thank you so much to all the esteemed lawyers from Nishith Desai Associates. Before we shift to the coffee session, I would like to again announce the continuing education code number, and that is 94306. 94306. Once again, thank you to all the esteemed speakers.
Thank you so much.